Hey, it's Nancy from Nancy Chu Homes at Keller Williams NJ Metro Group. This morning, I have been jotting down a lot of notes, so I actually put them on paper, which is rare for me. But I wanted to talk to you guys a little bit about. It's going to go deep dive, and so I need you guys to kind of bear with me and follow along, and don't get too lost in the weeds. And um, I want to talk a little bit about how supply and demand in this real estate market, how they play out in relationship to buyers and sellers. I know that that seems really basic, but I think it's actually a little deeper than that. So I wanted to scratch under the surface a little bit more. FYI, if you like to check us out and watch us on YouTube, please like, subscribe, and comment. I would appreciate that very much. And okay, I'm going to jump in. All right. So real estate by definition has this extreme relationship between the credit market and the housing market. Okay. Those two things are inextricably tied. That makes sense, right? Because most people need a mortgage in order to purchase a home. So those two things are tied. And if you understand what happened in 2008, the Great Recession, we had a collapse of the credit market, and so kind of housing tumbled with it, right? As did the dollar, et cetera. So, and therefore the rest of the market. Now, I was going to say that this is a really interesting interplay, and I'm going to give you sort of an if then therefore statement, okay? And it seems pretty basic when I first say it out loud. So, how hard it is to get a loan impacts the number of buyers in a market, and the number of buyers in a market ultimately impacts the number of sellers in a market. I know. You would think it would be the opposite, right? You'd think, well, the number of sellers impacts the number of buyers. But it actually kind of sort of goes the other way around. And it's partially because it depends on what you define as buyers. So there are different types of buyers. Okay. You have a subcategory of what you call the first time home buyer. That is the person who's entering the market for the first time. Okay. There aren't as many of those as you think. You would think there'd be a bunch, but it's actually a pretty sort of healthy portion of that buying pool. Now you also have investors who like to come in and buy a property, whether they choose to renovate this property and then resell it, or if they choose to buy and then hold on to the property and use it for appreciation gain, to grow their underlying wealth portfolios, as well as to maybe make some cash flow if they're choosing to rent it out. Okay. So the most important, and I'm starting to really understand this, the most important buyer is what we call the equity buyer seller. Okay. Now that person is a homeowner, a current homeowner who's looking to do something different. Okay. That person has purchased a home. They have equity in a home. They've grown equity in that home. And now they probably need some of that equity in order to help them make the move to the next home. Okay. Now, that homeowner's desire to make a move is the biggest driver of any residential real estate market. Okay, that equity buyer seller, a lot of it rests on their decisions to do what they're going to do. Now, I'm going to say this. Now we're going to go back and have a conversation about supply and demand, right? So at the same time, a market cannot survive without demand. So for instance, if I, produce a peppermint flavored oregano pickle and I try to sell that on the market, there's a strong likelihood there's going to be no demand for my peppermint oregano pickle. So even though I may have a ton of supply, no one's going to buy it. And so therefore, no demand there for my peppermint pickle. Okay. Houses, of course, are a little bit different. Now, let's talk a little bit about this current seller. All right. I'm going to bring this back around. So right now, if you are looking to supply the market with your homes, your peppermint pickle per se, right? A lot of the people who are listing their homes, I would call them market end use sellers, as in like people who have a relocation, so they have to move. Situations where perhaps you are moving someone out of a home because of infirmity. So you're, bringing an older relative into your house or into assisted living facilities, for instance, or death, estates. Estates are often situations that are looking to sell as well. Retirement, people who are looking to, you know, get rid of the houses that they're rambling around in. There's only two of them left. Their kids are out and grown, and their kids live in Minnesota, and they're thinking maybe we should sell and then retire and move to Minnesota to be next to the grandkids, right? And then the small portion also of distressed sellers who perhaps are in the process of going through, early signs of foreclosure, and so perhaps they're looking to sell and get out. Okay, that's in the end not the biggest portion of sellers that exist in this market in this country. That's just a small portion, people who sell by need. The real estate market is heavily dependent upon people who choose to sell by choice. I just said choose by choice, sorry, but they're doing it by choice. Okay, that would be that equity buyer seller. Okay, and right now the reduction in that equity buyer seller, all right, that could be caused by a handful of different things, right? The increased difficulty in getting a loan, right, can be a problem because don't forget, they currently have a 2.75 on the house that they're in, and they're looking at the market going, 6.875, right? And that's assuming that they use a 30-year conventional. They would have a little bit of leeway if they use some of the other products. But, you know, if they're looking at the difficulty in getting a loan, then they're taking themselves out of that buyer pool definition. And once we take them out as buyers, then we're essentially taking them out as sellers too, because that's what they are. They're the equity buyer seller, right? They sell in order to buy the next one. So we're taking a huge portion of that market just off the table right now. So you kind of have to start thinking of the real estate market as being significantly driven by this equity buyer seller. Okay. Now, on the flip side, I want you to think about this in relationship to mortgages. All right. On the flip side, if the market is now harder for buyers, because look at the buyers you have left. The buyers you have left, are sometimes people who perhaps might be entering the market as first-time home buyers. They may not have equity in a previous property to help them pay for down payment for the next property. So they're relying upon, their current savings and investments, et cetera, to help with that down payment. And I think for a lot of first-time home buyers, when they enter the market, there's an adjustment period of what they can actually afford to buy in relationship to the current interest rates that they qualify for. Okay, so if they're finding it hard to get their loans, okay, then you're going to see lenders going through a difficult process. And that difficult process is they're going to want to get paid more in some ways for the work that they do. Okay, so let me explain this. If buyers need multiple pre-approvals, if they need constant ongoing needs assessment because the interest rate keeps going ba, 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 right, thereby changing what this first-time home buyer can afford, all right, then the constant needs assessment, the interest rates move and deals fall out. You see more falling out of transactions as well. So understand that just like for real estate agents, for lenders, that is a lot more work for the same amount of return, because they sell one house to a person at a time, right? So it could take this delay of 2 months, 4 months, 6 months, maybe even a year or longer to get a person into a home just because of the nature of the market that they're in. Like in Northern New Jersey, the inventory challenges have definitely been really hard because they decrease the affordability capability of a lot of the first-time home buyers that we've got here. So, understand that lenders set their own interest rates. Okay, what they do is they look at what the Fed sets for the base rate. All right, and then there's some analysts who sit in a room somewhere in the corporate headquarters of insert name of bank or lender here, and then they go, oh, okay, this is how much we can afford to charge. And that's, you know, yes, the rates going up and down are directly tied to the Fed's base rate going up and down, but lenders have a good deal of their own, let's say they have their own agency in this, in that, they may choose to possibly apply a higher rate to help make up for the loss of income that you see in the financial delay loss in real estate, right? Does this make sense? Like the longer it takes a person to get into a home, the more work an agent or a mortgage lender may do in order to get them in there. So perhaps they're looking for a slightly, higher interest rate payout, so they get to sort of make up for that lost financials due to the real estate, you know, structural delays. Okay. Um, this is a really congested market that we're in our area. This is not the case for everybody else, okay? But there are lots of buyers right now. And I wouldn't say that it's more buyers than normal, but it feels like more buyers because of the ratio of buyers to homes for sale, right? We're looking at record inventory lows. I mean, our market area, our multiple listing is 51% down in inventory. So, that sort of lack of inventory is definitely helping to keep the houses that are listed very buoyant. So the question becomes, now I'm going to go bring this all back around to the idea of, the supply and demand and how that affects the buyer and seller. So in some ways, right, the health of I shouldn't say health, but the inventory is directly tied to the desire for buyers to move, right? So buyers essentially, it's really weird. Buyers control that market with their behavior in some ways, because we're talking about first-time home buyers, investors, and that equity buyer seller. So that desire to buy, in some cases again, that desire to buy new or buy again is the behavior that ultimately dictates how much real estate comes on the market. Because if your equity buyer seller is a huge part of that market and they do not desire to buy, then they will not list. And that mindset controls a ton of this market right now. Okay. And that's what we have. We have, equity buyer sellers who are sitting on the fence and going, I don't think I'm going to sell right now because the interest rate just simply isn't to my advantage to do so. And they'll make do with the kind of space that they have, even if they have desire to go. Right. So I find that very interesting because you're saying that the buyer actually controls the inventory or the mindset of a potential buyer. That's actually what controls the amount of inventory, not the seller. Does that make sense? The seller and the selling is really just a byproduct of a decision to buy. Isn't that interesting? Okay, now I'm going to go back to talking about once that seller makes a decision to sell, however, that seller, that equity buyer seller, once that person chooses to sell, then in our market, for instance, they have all the leverage, because they now have that that supply. And don't forget, supply is down by 50%. So now they have all the supply, and those buyers who come for that house, maybe it's 3 of them, maybe it's 17 of them, maybe it's 48 of them. But those are the kind of numbers that we're seeing right now in terms of the number of buyers who are making offers. That's quite a big range and potentially a lot of them. That buyer then relinquishes control of their offer process to the seller and what the sellers want or need in order to hand their house off to the next person. They control that by the amount of money that they need. They are not forced to sell to you, right? Unless they have no choice, as in like it's a distressed property, it's a relocation, it's it's an estate, it's any number of the sort of end use seller situations. But for that equity buyer seller right now who's choosing to list their home, they have all the control. You, as the buyer, have to figure out what their ultimate needs are, right? And handle any particular objection that a seller might have to an offer that you're making them. So this is very much like any other type of sales business in the sense that, how do you clear your way to a yes? You have to answer all the things that a seller could say no to. That means that your offer and terms, okay, have to handle any objection a seller may have to the offer that you're putting on their house, whether it's price, whether it's time frame, whether it's down payment, whether it's inspection issues or appraisal issues. You have to pre-mortem those, essentially, right? You kind of have to pre-mortem those potential issues and then clear them from your offer so that the seller has no choice except to say yes, because you've answered all of their concerns. So it's really interesting. The inventory challenges are essentially controlled by Our inventory challenges are essentially controlled by the number of people who choose to want to buy in this market, because that buying person becomes the primary seller in a real estate market. But once they choose to be a seller, all the leverage lands on the seller when you are in a very congested market like northern New Jersey. Isn't that crazy? It's kind of interesting, right? Listen, I know these. I know I'm sort of doing a weird deep dive on motivations, but I do think that it's an interesting way to get into the mind of what buyers and sellers are doing and to understand where your leverage points are, whether you're choosing to buy or sell. Okay. Now, if you have any other questions, you are always welcome to give me a buzz. 917-992-3098. That is my direct cell phone. I know I'm a lunatic for giving it to you guys, but if you want to call me, you can. And if you have any more questions, I'm happy to talk about it. Listen, I look forward to talking to you guys next week. I am, officially launching my training program for real estate training. And if you are interested, of course, you're always welcome to reach out. I'll talk to you guys next week.